You're watching News Now. This is ET Now, and I'm Aisha Faridi. The top news that the markets are going to be reacting to come Monday morning is the SEBI rejig, which was announced late last evening. The market regulator SEBI has tweaked the asset allocation framework for multi-cap funds, asking funds to park a minimum corpus of 75% invested in equities, with minimum 25% each in large cap, mid cap, as well as small cap companies. Now, funds must ensure this compliance by January 2021, says SEBI, which is next year. Remember, currently, SEBI rules do not prescribe a percentage allocation for large, mid and small cap stocks for multi-cap funds category. So such funds are given high level of flexibility to move between these market caps, and that is why experts believe that the new circular makes multi-cap funds more true to the label. My colleague Jayesh Khilnani joins in to help us understand and break down SEBI's new diktat.
SEBI has announced certain modifications to the multi-cap category definition. Now, let me quickly run you through what the modifications are. They have specified that the multi-cap fund can now invest 75% of its total assets in equity as well as equity-related instruments. Within the 75%, they have, however, put a cap of 25% in each of the large cap, small cap, and the mid cap category, and the existing funds will have to comply to these new rules by Jan 2021, which is when the new list of stock categories will also be made available. So how is this different from the previous rule that we had? Let's understand that as well. The original multi-cap definition stipulated that 65% of total assets would be invested in equity and equity related instruments, but there was no cap that was put on each of the categories of the large cap, mid cap and small cap. So that's the big difference that we are tracking. Of course, this will have an impact on certain stocks as well as fund categories as well. There are 5 multi-cap funds which have AUM of more than 10,000 crores. Based on these, what I have calculated is expected outflow of about 47,000 crores from the large cap category, and from the mid cap you will have 7,000 odd crores inflow. Also with the small cap you will have about 17,000 crores of inflow.
And here's Nikunj Dalmia joining in with his editor's take on what really does this mean for multi-cap funds, and more importantly, what would it do to small and mid-cap stocks when the markets open on Monday morning?
The move by market regulator SEBI is nothing short of path-breaking. This really has potential to change the market dynamics in the mid and the small cap space by 180 degrees. The entire multi-cap category in India is as large as about 1,50,000 crore. If various estimates are to be looked around, according to various estimates, the total allocation of the entire multi-cap category in mid and small cap stocks is not even 30%. So what we could see that because of the new allocation norms by SEBI, flows will move from large cap stocks to mid and small cap stocks. Mid and small cap stocks up until now have been suffering. In fact, the mutual fund industry has suffered because of the polarized nature of the market. Now, the liquidity flow is going to automatically come back because of the portfolio realignment. What this also could do, it could potentially re-rate the P multiples for some of the small and the mid cap companies. You could also see more activity in the IPO market. You could see promoter blocks being sold, and you could also see fundraising done by various companies at the QIP route now that the source of liquidity is going to be available. The other challenge for the mutual fund industry has been they have been underperforming. Now if mutual fund managers are able to put processes, if they are able to identify good businesses, if they are able to really use their skills, you could actually see the underperformance which the mutual fund industry has suffered largely because of concentration in mid and mega cap stocks that could also correct. The challenge, of course, is that in the short term, will large cap stocks suffer? Small and mid cap stocks will get re-rated, but in a bad market, too much of small and mid-cap exposure could always backfire. But prima facie, I guess in the short term, you can easily assume that there is a serious case for the small and the mid-cap category to start outperforming.
Okay, in fact, we spoke with a whole host of market experts as well. Market veteran Madhu Kela believes that the multi-cap rejig is going to be a big structural move, whereas Sunil Singhania of Abakkus Asset Management and Bala Subramanian of Aditya Birla Sun Life AMC believes that the rejig will make the multi-cap category true to its labels. Let's listen in.
I don't think this is only limited to next 2 months. See, this is more of a structural move, wherein the first time when the regulation got defined that what is the large cap, what is the mid cap, and what is the small cap, the rules were very, very clear, but for the large cap companies and for the small cap companies. But companies which were like multi-cap companies, it was not clear. So I think it is very timely defined that multi-cap funds must truly reflect the characteristic of a multi-cap fund, right? So if I just saw after this news came, I saw that a lot of the multi-cap funds have invested maybe up to 90-95% into large cap companies, right? Which is defined by the regulator. So I think it's a fantastic move. Would not have come, as you rightly said, would not have come at a more proper time when the world, when India in general is struggling. And this will, if it is implemented properly, and if the category of multi-cap remains where it is, this will move to significant re-rating of small and mid-sized companies.
The dynamics of the Indian economy, we are a country with a lot of entrepreneurs and a lot of entrepreneurship driving our economic growth. I think there was this move a few years back where, predominantly the mid and small caps were discouraged by mutual funds from investing. And that created a very lopsided market with a few companies, which are larger companies trading at P multiples of 60, 70, 80, and the rest of the market just being ignored. I think one thing which we have to realize is that what SEBI has done is a great progressive step. The name of the funds are multi-cap. And by nature, multi-caps should invest all across the market cap. But however, because of whatever reasons, the investments were concentrated only in few stocks. I think what this will do is broad-base the investment horizon, leading to even the smaller and mid-cap companies getting access to capital, investors again starting to take interest in them. And for a country like India, as I said earlier, it is a broad-based kind of a market and economy which helps the economy. So I think it's a great move. In terms of what it will do is there is definitely going to be rebalancing. However, there is time, so we have 3-4 months before this whole thing is completely applicable.
The way I see the circular is there is a clear definition that has been laid out for large cap fund and mid cap fund as to how much exposure should be in large cap, how much exposure should be in the mid cap. And the multi-cap fund, there is no such definition. Therefore, to make the multi-cap fund true to level and also have a uniform allocation between various market caps, this 25-25 has come. The way I see is this kind of 25-25 definitely makes the market breadth to get widened. And there are many companies who are in the smaller mid-cap space. When the tractions will get developed, money managers also maybe, since they're all bottom-up stock pickers, it may also force money managers to look at more companies in that category and then find the winners which can potentially perform better than the large cap names. Therefore, in a sense, in the broadening of the market and increasing the deepening of the interest in this kind of segment, definitely is a good move from regulation. At the same time, it's been done with the intention to bring in more true to level in that category, which also, in a sense, when the fund size are growing, true to level also becoming extremely important. Therefore, it serves both the purposes.